Today, we will talk about the January Barometer, what it is, how it works, and an example. The January Barometer is a market hypothesis that suggests the performance of the S&P 500 index in January can predict its performance for the rest of the year. For example, if the S&P 500 rises between January 1st and January 31st, some traders believe this indicates a positive result for the remainder of the year. Conversely, if the market performs poorly in January, it may likely continue to do so for the rest of the year. The idea of the January Barometer was first introduced by Yale Hirsch, the creator of the Stock Trader's Almanac in 1972. Traders who adhere to this hypothesis may use it to try and time the market, investing only in years when the barometer predicts a rise and staying out of the market when it forecasts a pullback. Supporters of the January Barometer cite data showing only 11 errors between 1950 and 2021, giving the indicator an accuracy ratio of 84.5%. However, critics argue that this may be largely illusory, as U.S. equity markets have historically generated positive annual returns roughly 70% of the time, suggesting the January Barometer may be a secondary effect of this general market trend. In recent years, the January Barometer has had mixed results. In 2022, the S&P 500 declined by more than 5% in January and ended in a 20% loss. However, in 2021, despite a 1.1% decline in January, the S&P 500 gained just under 27% for the year. The results in 2020 were more ambiguous, with a 0.16% loss in January leading to a 16% rally for the year. In 2019, a 7.87% climb in January resulted in a 28.9% increase for the year, showing that the January Barometer does not always accurately predict market performance. Here are 3 key takeaways. 1. The January Barometer is a market hypothesis stating that returns in January predict those for the rest of the year. 2. It is popular among some traders and was first set out in the Stock Trader's Almanac. 3. The January Barometer is predominantly a U.S. phenomenon associated with the S&P 500 index. Hope this would help. Thanks for watching.